Great. We're almost getting to the top of the hour, so we have time for maybe two or three more questions. Our next question comes from David, and David says, if I'm right, I saw that the Peterson Fund performance has been lagging SPY's performance for a quite long time. Any thoughts on that?
Yes. So few thoughts on that. I don't want to dismiss it because basically the S&P since inception has returned like 15% with dividends included. So that was a very early slide, and it's in all of our reports as well. So I can share a couple of thoughts. First of all, the S&P's long-term record is 6.8% plus inflation. Now, if you include inflation, those numbers, that's where people sometimes get to the 9 or 10% range. We are showing those numbers with absolutely zero fees, zero expenses. That is the absolute maximum that an investor would get if they put all of their capital in the S&P 500. Since inception of our fund, the S&P has been in this crazy long bull market. So the S&P is at 15% annualized. We are currently at 11.5% annualized. The challenge is that we're doing it safely. And we, by the way, we don't match the S&P. We're not like closet indexers. So we are doing this very strategically with a very concentrated portfolio. And it may take a little while, but I'm still confident that we are going to end up in the long term beating the S&P. Because from this starting point, and I don't want to alarm anybody, and the market can still continue to climb for some time, but we're going to have a major correction and possibly recession at some point, potentially even within maybe the Trump administration, like in 2 or 3 years. And we can't time it, but there are companies out there that are very expensive. And so the markets are kind of in a later stage, and there's a little bit of euphoria. People are pretty happy with the way that their 401ks have returned. And a lot of maybe they're just owning the index. So the challenge is, if you own the index now from this level, what has to happen to get to that 6.8% plus inflation over the next decade is like a very low average return. So maybe a 3%. It doesn't need to crash. It doesn't have to crash, but it's very unlikely for the S&P to continue growing at double-digit returns for the next decade. It's much more likely that we have some corrections, and corrections happen quite frequently every few years. So correction wouldn't be that abnormal, but I wouldn't be surprised if the markets had not moved that much higher, at least not at this speed, into 2030 and 2035. So our positions are really well diversified all over the world. We even have, as mentioned, our like private holdings of Dondo